What is a cap rate in real estate? If you are interested in buying an investment property, this is a concept that you really need to understand. Hi, I'm Mika Fleck and welcome to my channel. Today we're going to be talking about the capitalization rate or cap rate in real estate. And this is used in real estate to determine the rate of return you can expect to get from an investment property. So if you're thinking about buying a rental property, this is something you need to determine before you buy. Okay, there are formulas to figure out the cap rate. You start out with your gross annual income. You subtract your operating expenses, and that leaves you with your net operating income. Then you divide that amount by the purchase price of the property, and that gives you your cap rate. Okay, let's define some terms here, and then we'll go through an example. Your gross annual income are all the monies generated by your property, your rents, if you have washer dryers that are coin operated, anything of that nature. That all goes into your gross annual income. Then your net operating income is the gross minus your expenses. It's like a paycheck. You know, you get your paycheck and you see the gross amount, then they take out taxes and a bunch of other things, and that leaves you with the net amount. And that's what you take home and put in your pocket. Okay, so let's do an example. You own a rental property and the rent is $2,500 a month. So times 12, that's $30,000 gross annual income. Now the expenses listed here are $14,000 a year. Now keep in mind that every property is different. You have to do your due diligence because expenses vary from property to property. Okay, so $30,000 minus $14,000, that leaves you with $16,000, and that is your NOI. Okay, so now we have to divide the NOI, $16,000, by the purchase price of the property. Let's just say that the purchase price is $200,000. So that leaves you, after the division, that leaves you with an 8% cap rate. Okay, but don't forget something very important. Your mortgage payment is not considered part of your operating expenses. So you still have to deduct your mortgage payment in order to find out what your true cash flow is. So let's say you financed your property for $194,000 and your mortgage payment is $904 a month. That is $10,848 per year. So you subtract that amount from the $16,000 in NOI, and that leaves you with $5,152. Okay, so some of you are saying, well, that's only about $400 a month. That's not very much. But you can't forget that with a rental property, you are earning money in 4 different ways. You have your cash flow that we just talked about. You have appreciation of the property. You are building equity in that property, and there are tons of tax benefits. Rental properties are a great investment. I love them. They're great for building wealth. So, I have written an ebook, The Pros and Cons of Investing in Rental Properties. And there is a link down below where you can download this ebook for free. So go ahead and download that. It's a quick and easy read, but it's full of information. And if you liked what you heard, please subscribe and hit the notification button as well down below. And I post every Monday, and thanks for watching.